waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high, watching the candles, reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge, finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets called. Balance they draw down, standing strong through it all. Risk defined, profit inside. Seacrest Markets guiding every step into the light. Seacrest Markets leading the way. Making a move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Let's talk execution, let's talk speed. Yeah, the crystal clarity is what we need. Some is action, just the price as I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call. Balance based drawdown, standing strong through it all. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 or match traders speed. Technology serving the traders need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. We're the new era, the elite of the screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard in sight. Turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision. We are the flow.
Good morning, everybody. Happy Tuesday. 3rd of February 2026. Sorry, I got a message on my watch as I was just starting. How did everyone get on yesterday? Busy day yesterday. Markets were good. Markets were very good. I think I'm going to take a little bit of a different approach to today's macro technical discussions and highlight some pitfalls that traders see. Now, that comes off the back of a message I received yesterday in private, just with regards to how the markets are moving and how do you know when to trade long, how do you know when to trade short, and just some general tips and general guidance. So I'll definitely cover all of that during this call. But overall, good recovery yesterday in the markets. I know that we were discussing the probability of prices going higher on the S&P, which, as you'll see, we can discuss that in a moment. But the big talks at the moment are government shutdown. So give you some context. There's a partial US government shutdown, which is currently in effect. Now, what has that actually done? That will affect transparency, and also announced as of earlier this morning, no non-farm payroll data. So it was originally due this Friday. It's now officially been delayed, which means there's going to be a lot of sensitivity in the markets. That sensitivity will be listening to whispers around numbers and private data. So we're going to be looking at overall kind of tonalities, overall consensus around the markets, which could cause hypersensitivity even further across the markets. But with NFP officially being delayed from this Friday, obviously I'm expecting markets to trade fairly okay for the week. We saw, a relief moving on. We saw a relief rotation into markets. Obviously, we saw indices and equities rally. A couple of stocks that I'm holding hit all-time highs yesterday. Main one being CAT, dollar symbol CAT, which is Caterpillar. One of my favorite stocks, and realistically one of my most supported stocks over the next 4 to 5 years. Obviously, we're already in the first year of that fifth. It had a good recovery last year, which is when I got in, and I'm expecting it to be pretty much a bellwether on the markets as they provide the picks and the shovels, basically, to expansion and growth, etc. Expecting markets really to try and find a base this week. We had pretty much a Black Friday crash in gold and silver last week, which we all discussed yesterday and we were talking about during the day. But markets are attempting to stabilize under the shadow and guise of the US government shutdown, as well as a shift in Federal Reserve leadership, with obviously Kevin Walsh coming into the mix. As for economics, we spoke about macros, the RBA interest rate decision. Now, the RBA actually increased their interest rate by 25 basis points. So an increase on that from their previous at 3.6%. So it's now sitting at 3.8%. The US yesterday, obviously US markets, the Dow Jones rallied just over 1%, which added about 500 points on to the index. And the S&P, like we discussed, finished just shy of 7,000 at 6,976. So big day yesterday. We can look at it on the daily chart, and we'll talk about what I've got inside here. So there was something I want to show you all inside here, and I've made a comment on it. And that just comes off of the back of that comment I received yesterday in my private messages around shorting the market where it was and why you favor momentum trading and follow market structure, support, resistance, supply, demand rather than trading against it. So we'll cover all of that in greater detail. But if you look at the yesterday's candle or the yesterday's daily chart, we've got that huge engulfing Marabuso candle. We had a nice test into that level that we spoke about yesterday, the demand, which we was highlighting in the week prior. And we've had that good rejection off of that demand level. Now, price is obviously trading even higher from yesterday's close. It's up another 20 points, and it's trading just under that level at about 6,997 spot 20. You can see that we actually traded and wicked above that overnight, and we're just holding that level. It's very sensitive. There's going to be a lot of buyers and a lot of sellers up at around those levels, but the expectation was for price to continue higher. You know, I'm pretty much an uber bull in the markets. I'm not very, like I said and touch upon all the time, so it's a bit boring. I'm not very good at being short because you have to have a very pessimistic outlook on life. I much rather take the opposite side through hedging with an options contract. So I've still got some mitigation on any downside moves, but not a massive amount. So yesterday was just insane, really. Obviously, London session, bullish engulfing, continued throughout late London session into New York. And then as we traded out into the close and into the end of the US trading day, we just started to get very corrective as we traded into those all-time highs. Now, as we get down into the lower time frames, we'll talk about those two areas of supply that we covered, which was the one in and around the middle of the move from that previous front leg down, and then the one at the extreme, which is where we're trading at the moment. So we'll discuss all of those in great detail. As for where price is now, higher time frame, we're bullish. Lower time frames, we were, and I haven't looked at them this morning, lower time frames, we were bearish on the lower time frames, but others we were bearish unconfirmed. So the 4 hour, we were bearish unconfirmed. We took out that structure to the left, which caused the bearish comment, but we were unconfirmed. So we needed to see a pullback into something in that previous leg, whether that was extreme supply, which is where we're trading now, or the supply around EQ, which you can see if I just extend this out to the right. Let me just wrong keyboard. I just need to hit my Bloomberg keyboard. We've got no reaction whatsoever. We just blasted through it. So it shows you that momentum was to the upside, and equities have held up pretty well. There was a mixed bag, don't get me wrong. But like, okay, the NASDAQ did rally 0.6%. SanDisk was up 15% of that. But Nvidia was down, Oracle was down. So, and we also saw a washout in Asia, as well as Europe, really. You know, Nikkei was down 1.3%. The Hang Seng was down about 2%. The European markets did recover to trade about 1% higher on the close. But overall, you know, Asia markets have pretty much been hit the hardest from those previous gold moves. So where are we sitting at the moment? We're sitting at 7,000 roughly. The current 4 hour candle is presenting us with a indecision candle at this moment in time. We've still got nearly just under 2 hours left until that candle closes. So we cannot make any judgment calls at the moment. We're not looking to get short on that candle. We're not looking to get long on that candle. So we just have to wait to see the direction of what this candle closes like. Does it give us more decision? Does it give us more identification on what's going on? At the moment, it's holding around the point of control for the day. And we're presenting a doji candle, which almost looks like a spinning top at this moment in time. So I'm not too concerned about what's going on at the moment. I'm expecting 7,000 to be the level that we either... ridiculous comment I'm about to say. We either sell off from or we blast through and we trade up to 7,100, 7,200. Because there is a lot of volume up and around the 7,000 level. It's a psychological level. It's the all-time highs. It's the big round number. And we need to see further development. And if we do sell off, as per our prior discussions, you know, we're sitting now at that double top scenario where we are looking to get long. So how do we identify this? Look at volume, wait for confirmation, trade with the momentum. Don't try and call it, because you will lose, and I'll break that down on this next few charts. So we were calling about the 1 hour supply area. The 1 hour supply area was the mid of that previous move that caused that break to the downside of that previous internal structure, and we took that low. Now, we had that bear flag formation, so the shorts were in play from that original move, but as price came back in, you don't want to be shorting yet. You want to wait for confirmation. And as you can see, we had a slight reaction on the 1 hour, but everyone will realistically be trading on the lower time frames, the M15, the M5, the M1, the M2, especially as you're an intraday trader and if you're a scalper. But you have to be mindful that we were trading out of a daily level. We were bullish. The 4 hour was bearish, unconfirmed. So the expectation was for the 4 hour price to pull back either into that extreme at 7,000, which we're trading at now, or trade lower. And it hasn't traded lower. It traded right into the extreme. So we've had that huge development throughout the US session and European session and into Asia. So we're trading right at the pivot on the 7,000 level right now. So we have to now be patient and wait for the market to show us a sign. If we were just to look at the 60-minute time frame as we are and try to pick out what's going on, we do have the bullish wedge. Now, it's very corrective. And what I mean by bullish is because we're expanding in price to the upside very correctively, it's still bullish, but it's very thin volume, it's very corrective, and that suggests that as we trade into that big psychological level, that buyers' momentum is slowing down. What it doesn't mean is that sellers are now stepping into the market. It does mean buyers are exhausted, but it doesn't necessarily mean you go short just because of that. Because buyers will now be waiting for a better price to get long. Sellers are waiting for confirmations to get short. There are going to be reasons on the lower time for it to get short. But please wait for confirmations. You see far more people across CFD brokers and prop companies lose money and blow their accounts, whether that be their daily drawdown, their daily risk, their maximum drawdowns, through calling tops and bottoms without the intuition, without the experience, and just FOMOing into a trade or YOLOing into a trade. And that's okay if you've got the experience, you've got the intuition, you understand risk, and you're not just trying to hit a home run. And that is also not a good trading habit to have. Would I like to be short in these levels? You know, yeah, I would like to be short. But am I going to get short without confirmations and confluences? No. So whilst you are going to miss a percentage of that move, up to 25% of a move based on, you know, if you're looking at it from a quarter perspective, or breaking it down into a quarter, you tend to miss that first quarter of the move. You capture the middle of the move, and depending on how you manage your risk and manage your trade, you miss the last quarter of a move, and that's okay. But we are showing signs of exhaustion up here. It doesn't necessarily mean the trend is changing, but it does mean that buyers are looking to take profit in and around that 7,000 level until we get confirmation that we could be trading higher, or we trade shorts and then they get short. But so far, our analysis has been pretty bang on and pretty to the point. So I'm quite happy just to sit aside and let the markets do its thing. As we drift down into the M15, we do start to get some color, and I can touch upon this now because probably people are wondering why, but we'll touch upon that maybe as we hit the M5, maybe into the M2. Let's talk about where price is right now. So we're bullish on price. Demand is in control. We're continuously making higher highs and higher lows. The momentum and the volume is starting to shallow out here. You know, we're trading around the point of control. We've got reactions around the point of control, and that previous 15-minute candle showed us a move up to hit supply after taking out that previous area of demand, and we've rejected and we've closed below the point of control. So in some degree, we could start to try and figure out how to get short. Doesn't mean we stay short, not entirely, because we've got points of demand and areas of support to the left from that previous leg that could cause us some challenges. Now, if we are going to focus on trading the front leg, we ignore these. We just use these as points of confirmation where price could be challenged on our way down. Now, if we are not looking to get short, we're waiting for these areas to confirm whether these are going to be the last ports of call. Now, what do I mean by last ports of call? The last ports of call term is something that I term as my last potential area to get long before the market breaks down. Now, what that tends to be for me is a lower probability setup. It's still a probabilistic trade to the upside. It's still in line with the overall momentum and overall trend of the market, but it's lower probability because we're reacting to something significant on the resistance or supply side, be it big round psychological numbers, be it an area of resistance where lots of volume is, and or supply where a significant amount of interest is or volume, be that active orders that are coming into the market or be that resting orders that are getting filled. But as we trade around this kind of 7,000 psychological number, it's very easy under the guise of we're extended. 7,000 is a big level. It's very easy to get caught up in the noise to take the shorts. Very easy. But traditionally, when we trade in and around, that kind of the 52-week highs, the all-time highs, more times or more often than not, based on a probabilistic scenario, is we trade higher. Now, it's very easy to want to get short, and it doesn't necessarily mean that on the flip side, we're going to trade immediately up from 7,000 into 7,100, etc. And like I covered last week when we were hitting metals at 5,500, this will fly to 5,600. It will fly, and it did. Now, it flew to 5,600, not on rhyme, logic, or reason. It flew because of momentum. That was it. There was no logical, rhythmic rhyme as to why price traded into 5,600 other than buyers trying to get into the market, lots of buyers overwhelming the sellers and pushing prices up. And obviously, as that pushed prices up, any level above 5,500 that was for the short side on the stop was getting triggered and then stopped out, which was fueling levered move to the upside. So it was just absolute oxymoron, esoteric momentum to the upside and no real logic. My view on current situation. So I'll touch upon that crypto genie. Not an issue whatsoever, right? If you're new to the channel, definitely check out all last week's live streams. Every day I cover metals. Every day I cover indices. And more often than not, I'll also cover the DXY and I'll cover cryptocurrency, primarily Bitcoin, unless someone asks me for something specific like ETHUSD, for example. But I cover it every day. So you'll actually be able to get a lot of nuggets and information from the previous live streams on metals that could give you added confirmation on my overall viewpoint on gold. We touched upon it. We called levels. We traded those levels. We were calling 4,500 on Friday. We were calling 4,500 into Monday. We obviously traded out from that, but we were calling 4,500 from the previous Friday. So definitely go and look at that. It was called before the move happened. So you'll see how we viewed it, how we broke it down, and what's actually going ahead. And before that, we were discussing the longs. We were long, and I was long for clients from 2018, 2019 in gold when it was under $2,000 a troy ounce. So definitely check the live streams out if you're new to the stream, Crypto Genie. Good morning, Anthony. So coming back to the ES, we've had that breakdown of that bullish wedge, right? Now that bullish wedge is very corrective. If we cannot recover from this level, then we are going to see a corrective trade to the downside. Does it mean we're shifting bearish? No, it doesn't. Maybe on the lower time frames, which hold less weighting and are more fractal, we will see a short, but it could be short-lived, and pardon the pun on that one. But at the moment, we're struggling. You can see that we're struggling to recover and trade higher, but equally we're struggling to trade lower. And that is just because we're trading around that point of control. There's lots of volume coming into the market. Buyers and sellers are pretty much battling it out right here. So we're very efficient on where we are. Obviously, from a standpoint of the ES, you know, how do I look at it? I want to see a breakdown from here. I want to see, as if I'm going to get short, I want to see something like this. And I want to see a confirmation that supply is going to be respected. And then I want to get short. So, you know, realistically, I'd look for supply / resistance to be respected. I'd look for the lower lows and demand areas or support areas to be broken for price to trade lower in that front leg. And then all I'll be doing is looking at how do I get involved in those moves from the structural points when momentum is confirmed, be it above the structural highs, how I want to do it. In terms of the risk, I can't or cannot definitively tell you where I'm going to be placing my stops, because obviously I haven't seen how prices developed out. But if I was to get short, that's how I would do it. At this moment in time, I am nothing. So there's nothing done for me. Let's go down into the M5, because I actually want to discuss that failure short that we were talking about with this trader, which is here, which let me go into. So we had that change of character and we were starting to shift bullish. Now, in this part of the leg, as we were discussing it in the morning, we were discussing how this is the momentum to the upside. We need to see demand be respected. Now, as we traded out of the live stream, as you can see, we come out of the live stream, we were very, very corrective. This is a bullish pattern. Uno momento, por favor. So we've obviously got this bullish flag. Now, bullish flags have 6 or more ways to trade them. Okay, so it's not just as simple as go long, go short. Price can develop in a certain way. It can break down outside of the bearish flag. We could fake to the downside, then trade higher, which we've done, right? That's that one. We've got several others, but I'm going to only discuss this one. We've got fake moves to the downside and we've come into demand. Considerations, we're trading around the point of control, hence why we were very, very corrective. We've traded to the downside. We've got a level that we've traded below. We're trading around point of control. Momentum is bullish to the upside, and we faded out of that bullish flag to the downside. So and this is why I want to cover this, because a lot of traders are new to the live stream or new to trading. Under 10 years or under 5 years is still pretty new. Some traders will still get caught up in specific patterns because they're trying to call the tops of a move. They're trying to trade against or fade momentum, and they'll get caught with their draws down. And this is a perfect example of that. Now, if you were trading systematically and you were just looking at technicals, this is where you get caught out, okay? This is where you get caught out, because technically and systematically it looks okay. All right, we're breaking down. We're showing lower prices. Price could continue with the overall bearish momentum that we previously saw. We are looking for some form of demand in that previous leg to be respected and held. But what actually happens is you trade against momentum. The order flow is bullish to the upside. We had positive economic, geopolitical, macroeconomic and economic news supporting the longs. So generically, you're favoring moves to the upside. So if you were trading systematic, you followed your plan, you've hit your edge, you've taken the trade, you've very correctively been in and out of profit, and then sayonara, we've traded to the upside and we've closed out, you know. What actually happened is the point of control was here. We've had the bullish flag continuation with one of the 6+ scenarios from a bullish flag, which is fake break to the downside. We've correctively traded into that previous point of demand that traded out from that previous supply high, traded into the point of control and has taken out areas of supply to our left on our previous leg. We've respected demand, and what we should have been doing is looking at continuation trades with momentum. Now, most traders find it difficult to get long when prices are, in their experience, overextended or too high. More people lose money trying to call tops. And this, in theory, whilst we've got price to the left, this, in theory, is a top. So refer it to that comment. Look at the probabilities. All you needed to do in this scenario is not take the short because it's a bullish flag. Demand is in control with bullish momentum, and there's supporting data coming out from the macros and the economics, while we don't really want to be either getting long until we get confirmations or getting short because we're trading against everything. It's like you want to fail. Now, obviously, I wrote a comment why we should favor trading with momentum / trend / front leg and not against it. This is a prime example. You tried to take a short. Now, shorts have got limited downside in terms of, sorry, let me rephrase that. Limited profit, unlimited downside. Yes, you've got your stop in place, but from 6,900 shorts to 0, you only make 6,900. If you're long from 6,900. Your downside is 6,900. Your upside could be whatever. When you're trading in stocks or when you're investing in stocks, if a stock is $50 and you're trying to short that stock, the maximum amount of money you can make per stock, unlevered, is $50. Okay? And that's assuming you can get out at 0. Right? If it's an option contract, slightly different, you can obviously get out because you can exercise it. But you've only got $50 downside. If that stock rallies to $150 per share, per stock, that's $100 upside. You have limited profitability and you have unlimited downside if you're short, because the market can go higher. You can never go below 0. Similar scenario here. Obviously, you're day trading, so you're always going to have your stop in place. But this is that particular scenario where you've traded against everything. Yes, systematically, the probability was there based on your edge, which realistically has an alpha, a Sharpe ratio of 0 to 0.9. And you have to have an extremely high strike rate to ever make any money. Whereas if you trade and get out of your own way and trade with momentum and trade with the overall flow of trend, you will actually do better. You just need to reprogram and rewire your edge to actually understand. Stop trying to trade against momentum and against the trend. And remember, statistically, the indexes always trade long more often they trade long than they trade short. So just bear that in mind if you're trading indexes, okay? Now, we've traded into demand. Had we have not taken this short, or had we have not tried to force this short that we just had an example on, we would then be looking at, okay, demand is in control. Momentum and order flows to the upside. We've just had a bullish flag pattern. Could this bullish flag be a fake out to the upside? Well, we don't know that. We could just be trading into the range of the extreme. So if we are looking to overall trade longs, and our edge shows us that we want to be long, we want to get long from somewhere inside here. Our stop could be comfortably placed, somewhere below structure. If we want it to be placed below structure, we can then go on to manage the trade. Do we want a 1-to-1? Yes, we do. Do we get a 1-to-5? Yeah, we do. Do we get a 2? Yeah. Do we get a 2.5? Yeah. Do we get a 3? 3.5? Yeah. Do we get a 4? Yes. Do we get a 4.5? Yes. And then we fade out to the end of the session. Now, bearing in mind this is the London times, if we switch that to the New York times, because we're starting to trade into New York, realistically, we want to be getting out around 4:30, which is about here. There's about 4.5 hour available. Had we have trailed our stop, or had we have been really precise, maybe we would have tried to get out and call 5.3. But let's face it, I'm not getting out of 5.2, 5.3. Last and worst case scenario, unless I've hit one of my profit targets from our previous determined levels, which 1.5 I'm quite comfortable with. I'll always leave nuggets running 10-20% for the balance. So as we traded into 430, if I was in CFDs, I'm still holding. I'm not worried. I'm considering and calculating what my swaps and rollover will be as we trade into Asia. I'm looking at the news that's scheduled out for the overnight session. Is there anything potentially developing that could cause gap risk, overnight risk that maybe I don't want to get involved in? Maybe I want to close out before the session close. But all of that is what I'm doing towards the coming into the end of the session. And that will then allow me to make an informed decision on what the market's doing. So if I had 10-20% left running in the trade and I'm not too bothered, I'll let the position run. If it's a sorry, I got hiccups. If it's a futures position, then I'm closing out before end of day, because most futures prop firms want you to close out around 16:30, which is 4:30 p.m. ahead of the close. But overall, that trade would have been another solid day in the office. And more than likely, and more often than not, depending on most people's rules, if they take one loss in a day, they're not trying to get back into another trade. They've taken one loss, they're walking away from the day. Maybe they take two trades. But if you took that one, if you used your gunpowder on that one trade, you'd have taken a loss and you'd have been out for the day and you'd have missed all that upside. Yes, okay. Did you know that there was going to be a lot of upside? Well, in theory, no. But look at the economics. Look at what's developing in the markets. Look at what the big boys are doing in terms of the stocks. Where is the stock prices trading? Are they trading higher? Are they trading lower? What's the general rhetoric? Is demand in control? Is demand holding? Are we targeting 7,000? There's lots of little nuggets that could potentially suggest that upside was implied. Where's the volume? And everyone that trades should be paying for Squawk, some form of volume platform. I'm not gonna promote any of them. I'm not affiliated to any of them. Maybe down the line we can be. Maybe we'll get some sponsorships from them. Maybe we'll be affiliated to them, because places like Squawk, places like Bar Chart, Bookmap, all of these different places can give you better and greater insights to be and trade more professionally. Doesn't necessarily mean you're going to make more money. I've seen interdealer brokers, institutional traders come out from their professional and institutional desks and they're absolute dog shit traders. But primarily, most of them invest most of their money into the markets and then they just punt. They'll just punt in the markets. But most of them they're only good with the bank's balance sheets, and that's because their balance sheets are pretty much unlimited. So just, they're not necessarily the greatest. There are some absolutely exceptional professional institutional traders that have come from certain desks and gone on. One guy everyone knows, one guy that I had the pleasure of working with in about 2010, 2011, he retired from the professional institutional desks at 27 and became probably one of the best investor traders I know in the stock market. But I say that about a few people. I'm quite complimentary to a lot of investors and traders that I'm surrounded by. However, coming back to that is a systematical trade with no intuition and no discretion. You would have taken a loss, and realistically, if you only took one trade in a day, because that's what your rule said, you've taken a trade, you've hit a loss, and you've moved and missed the move. Now, I understand and appreciate missing a move is not that much of a big deal. It's not, we're not bothered about missing a trade. But what we are concerned about and what we need to really home in on as investors and traders is, yes, it's okay to miss moves, but what it's not okay to do is be trading like an idiot and trading against momentum, trading against the trend, trading against order flow, trying to be a prick for a tick and call the tops. That is not okay. You have to realistically be trading with momentum, with order flow, with resistance or with support, with supply or with demand. And then you need your little nuances of economic data, your confluences, your fundamentals, your macros, every little piece pulled together to give you an overall insight into where the market could and is most likely on a probabilistic scenario head, and give yourself the best chance actually trading that move. So quick rundown, obviously summary, we have now obviously committed somewhat to the downside. So it's starting to show that we are maybe looking to have lower prices. There's still areas to the left that we could have come into. So let's just keep an eye on that for later. Before that, we'll go into gold because we've pretty much covered the majority of the session on the macros and ES. So we don't need to really touch upon that much more. So let's take a look at the shiny metal. So as per yesterday's call and the calls prior, we were originally targeting around that 4,500 handle. We traded obviously lower overnight into 44s, maybe just slightly lower depending on a number of factors. And of course, the data feed that we're looking at, it could be slightly different. And we've continued to reject and trade higher. Now, today's price action shows that we're trading 47 and above. We're now trading into 4,900, targeting that big 5,000 handle. Again, big round number, psychological level. And we'll, of course, look to see how New York actually trades into that. For right now, we're looking at holding 4,900 with a small retrace by the looks of it. Now, that was a big sell-off. So, depending on how we are looking at gold, if we're investors for the long term, lots and lots and lots of people would have bought this. They would have been buying as price was trading down. Realistically, anywhere below 4,500, they would have been buying with the expectations for price to eventually get back up to 5,700s. And they would have been buying all the way up here, 55s would have been bought, 50s would have been bought. We would have seen continuous buying, because when people are looking at where markets could be going long term, they use gold as somewhat of their monetary hedge. They're not too bothered about outperforming benchmarks or outperforming indexes. They're looking at outperforming monetary values and inflationary growth. Yeah. So at the moment for me, obviously I'll be looking at where prices are trading. So if I'm looking at that previous leg, demand obviously has tried to change. So we've got that push up, we've got a respective demand without any supply going to the left, and then we've traded higher. So we are bullish into higher prices. I mean, as we're trading below 5,100s, maybe there are shorts all the way up to 5,100, but I need to see something get confirmed. I mean, on the 4 hour for me at the moment, there's nothing. Let me see what the 60-minute 1 hour chart says. So there's definitely going to be a lot of volume sitting at around 5,000s, right? So 5,000, so inside this level. So shorts are definitely still available from 4,900 to 5,000. But we're not just going to short there. You'd wait for confirmation, you know, because we've got demand in control. I'd want to see something and then supply being respected. And then I'd be quite comfortable to be getting short from 4,900s. Sorry, I need to turn notifications on my watch. It's so bloody distracting. It just vibrates on your wrist 24/7. Emails, notifications, everything. So distracting. So big levels that I'd be looking at for price to be held up is 5,000, 5,400. Just to see if we get a reaction around there. But as we trade into 5,400s, I would be expecting us to come into 5,500s anyway. You know, that's pretty much it for me on that scenario. All of our analysis is still marked out. So for those of you that have been looking at the live streams, you've seen all of these levels being called out throughout real time. And then, of course, following the sessions to see how they developed. And see if we got them wrong, how we got them wrong, where we got them wrong, and on the flip side, where we got them right, and how we could have traded them had you have looked at those key levels. So first level, 5,000 key level for me, we're trading at around 84, 83, 84 points below that. So quite a few ticks indeed. Point of control is splat bang around 5,041, 5,042. So keep an eye on that level. And it's what? 9:42 a.m. UK GMT. So as we head, as we head into what we call the London lull, which is around 10, 11 into 12 pre-New York session, I expect the session pretty much to trade out sideways. In terms of what we're seeing in gold is we are definitely seeing some form of recovery, but because it remains about $600 or so below last week's peak, it's quite tepid. I think overnight we were looking at levels like if we when I was looking at how the session traded, you know, 46.50 was pretty much our settlement area, and we were looking at how price was trading, and I wanted to see it come back into 4600s to trade up higher, but we just traded into that previous engulfing Marabuso candle, 47.33s. And again, trade with the momentum. Stop looking at this. You know, we've got these levels to highlight that the market is potentially going to cause us some challenges around there. But we want to be trading with that front leg. We want to be trading from big orders, big levels on the higher time frames with that front leg. And we don't really want to be trading against it. When we trade into this, yes, I don't want to be immediately selling, but I don't also want to be buying. I want to be seeing how price is going to react from there. If price reacts from here and we come into some point of demand and we get momentum to the upside, maybe I'll look to get long from somewhere inside here, or maybe I'll wait and then I'll get long. I'm happy to miss out that particular section of the move for looking to consider and establish if momentum is going to continue in line with it. So yeah, nothing done on metals at the moment. I'm still looking for these levels to be respected. If we get a pullback before we trade into that bigger price, then maybe I'll look to get long around 4,800s, into 50s, into 5,000 and then beyond. So that's pretty much my outlook on metals and gold at the moment. Silver's going to be the same because it's highly correlated. We've had a recovery, same scenario in silver. Same stuff. You know, we traded off of that level 75. We traded obviously a bit lower. We're starting to see a recovery. Demand is in control on the lower time frames. We're bearish, obviously, on the higher time frames, bearish unconfirmed. You know, the 60 minutes, the 1 hour has made a recovery. We've got, again, we have this pennant, which we've got here. And we would have been looking at selling the extremes. We would have been looking at longing the extremes. Now, because we were trading in a higher time frame demand, we would have been seeing that, okay, if we're looking at theories and we're getting short here and we're getting long here, if we're trading in a higher time frame demand and all of the bad news has come out, we could start getting long again. It's the same confirmations and discussions that we have all the time. Getting long after all of the news comes out. So fading the news or trading after the news comes out is the scenario, right? We never trade the news. We fade the news or we trade after the news, and that is it. But same information applies here. All of the bad stuff has come out. There is no more bad news. We know the government has closed, the shutdown, temporarily or partially. We don't have the Black Friday crash. We don't have data coming out for Kevin Walsh because he's already been announced for the Fed chair. So we now know the worst case scenarios in the market. So we're happy to consider start looking for longs. Doesn't mean we're getting long, but we could start considering getting long. And we need those confluences to do so. So very corrective, very tepid recovery. But we've respected supply, so we could sell from there. We've respected demand, we could buy from there. We've then got to trade out to the upside. We failed to close back inside or go lower. From here, we could look to start getting long. Okay, so if we weren't long from inside here already because we've respected demand, because we're trading the extreme of the range, and we know it's a bullish pattern because we're in higher time frame demand, 75 level was a key area for a bounce in price. And if we weren't long from there already, we could have started getting long from somewhere inside here. Now, stop placement, whatever, up to you. You know, depends on how tight you like to be. If that's the scenario, can we get a 1-to-1? You know, in the leg, it's available, but we haven't experienced it yet. So we're still holding this trade, but volume's fairly flat. And from there, we need to see, obviously, we need to see price mature. So again, I'm happy to be bullish silver. We've had a bullish confluence. We've had bullish momentum kick into the market. Overall, I like the way this is looking. It's recovering. It's highly correlated to gold. Gold is obviously making a recovery. We've got some upside left in gold. The ratio on gold is looking good. So I am still expecting higher prices, but the recovery is very, very corrective. Obviously, we saw silver on Friday crash, 31%. It fluctuated very significantly yesterday between that $71 and $81. We're now trading at $5 or so above that 81 level. And if we can hold that $80 level, we will continue to see dip buyers step in, and we will continue to see sellers get margin called. So that's pretty much it for me across those instruments. ES, gold, silver. Now let's take a look at the DXY, because I know Anthony's trading sterling Aussie and Euro Aussie. Man, you do trade some crazy pairs. Is that because of the RBA decision? So, again, sitting on my hands, I wouldn't be looking to get long now. Price for me has already moved. Let's take a look at the DXY quickly. I might take a look at EA and GA. I haven't looked at it a long time, but there should, you know, with sterling and the European markets being open and obviously the RBA news overnight, it could be an interesting play. So let's move out to the daily. That initial gap has now been filled. Obviously, we had that rejection and retrace. Prices obviously pushed higher. We're definitely staging a recovery in the DXY. I mean, with obviously the partial shutdown, non-farms, we could start to see some form of bullish move. But at the moment, I can't even be long on the daily. I need to see lower prices. We traded through that level. We did have a reaction. Look, we had a reaction here, so we could refine that to there, just so you see where I'm looking. We had that reaction there. No major reaction, no close to the downside. We didn't come back into retest demand. We just corrected, then moved to the upside. So supply failed to be respected, which means lower prices could not be sustained. Demand obviously was already in control by that point. We had continuous moves to the upside and demand was holding. But if supply wanted to take control from there, that would have been the level I would have been looking at initially to see if we could get that sustained momentum. Now, prices continued higher. Expectations maybe, you know, that previous area of support could turn resistance at 98 and a quarter. 98 and 3/4 is obviously another level, which is pretty much either side of that point of control, as you can see it here on the 4 hour. 1 hour, you know, nothing much to be done. We've got lots of bullish momentum. We had a nice pattern here, which, again, similar scenario to the S&P, right? People would have tried shorting this because we've come into supply. We're not showing any further higher prices, and they would have been trying to call this as the top. But all price has done is range. Now, if you go back to the foundational ideas of patterns of the Wyckoff methodology, this is just a bullish accumulation pattern. Now, the bullish accumulation pattern can form in many different scenarios, but we've had bullish move into the level. Now, traditionally and probabilistically, we would identify the move as being a bullish continuation pattern. So we would want to trade in line in the direction of how it entered the pattern. And how did it enter the pattern? Bullish. So we then had corrections to the right-hand side. Yes, we could go short, but we don't just take a short because the market looks like it wants the short. That intuition takes time to develop. But we also need to look at how the market is. And as many of the biggest professional traders and investors say and state, the market can stay irrational longer than you can stay solvent. Okay, so trade with the overall structure, the overall order flow, the overall momentum, and trade with it. So we got that breakout to the upside. How you get involved, entirely up to you. Lower time frames would have given that confirmation. Nice, Anthony. Obviously up to the upside. The projected target at 98 hasn't been hit yet. Momentum is starting to kick into the market on the DXY. There's not really anything to the left that could stop us. The first real point of traffic, maybe 98.25s, which you've already touched upon. And then that 98.70 level, which is around that point of control. So the straddling of that. They're realistically the first areas of kind of where I see markets kind of coming into, which almost aligns, you know, with our 98 level on that previous bullish target. 60 minutes. Let's go down to the M15 and see how we could have taken advantage. So again, if you're trading the range, you could have got short from the extreme if you wanted to. You could have got long from the extreme if you wanted to. Obviously, if we're looking at getting long in line with the overall entry of the market, the overall positioning of this move, and the fact we're taking into consideration, 1, we're trading with momentum. 2, we're looking at the bullish confluences. 3, we're looking at the pattern and the order flow of the leg. And we also identify that we're trading from a higher time frame retrace, higher time frame structure. the expectation is for price to trade higher. We could have taken this move here, have your stop above the left, targeting the low. You would have got just over 1R. If you're then trading, maybe 10, you leave 10% on, you would have got then stopped on your 10%. You're trading from the extreme. You're trading to here, you get another 1R. You're leaving your 10 to 20% on. But if you are, I guess if you're adamant that you believe the market's going to continue upside because of all of the confluences, we're long momentum or the flow, it's a bullish accumulation pattern, it's a bullish flag, or it's a bullish wedge, however you want to determine it based on your analysis. We've got 1R, we've got 1.5R, we have 2R, we have 2.5R, we have 3R, we have 4R, 4.5, we have 5. There's more than 5.5R available in that total move. I don't personally think you're going to get 5.5R. I think you'd have taken anything between 1 and 4R. Would have been quite comfortable. And that, for me, it would have been between 1 and 2R. 1 to 1.5 is pretty much where I'm most comfortable at. And it's because, I'll explain. On my own portfolio, on my investment portfolio, I'll hold trades, investments, because I'm a position holder in my stocks for a long duration. 3 months, 6 months, 12 months or more. So they're long term for a retail trader. In the real world, they're medium term. Anything over 12 months is medium term. Anything under 12 months is short term. Anything above 5 years is long term from an institutional professional expectation. But when it comes to day trading, I've had those big levels. I've had those 10 to 1s, 20 to 1s. But with prop firms, it's extremely nuanced to have bigger RRs without big stops because of the way the market moves. You've got your spreads, you've got your veracity in price action, and with the considerations of your daily drawdowns, your consistency rules, you have to adapt your edge. And I have an edge now that comfortably with the 1 to 1.5 gives me in the region of 60 to 65% strike, a sharp, depending on the timeline of data, between 1.2 and 2.2 in terms of my sharp. And it puts me in a very comfortable position to ensure that with prop firms, I'm not blowing accounts. My spend to payout ratio is positive, significantly so. As long as I take the trades based on the edge, whether that's it is a combination of systematic discretion and intuition. That is it. And I don't teach the edge. I don't show the edge. I don't discuss the edge. And that's because I don't want to. I'm not going to be teaching my edge because I don't want that to be ripped off. I've seen it many a times. I've had edges ripped off, and quite frankly, it's just not worth the time and the effort of doing it. So you have to realize with prop firms, be that CFD prop firms or futures prop firms, you want an edge that realistically has a higher strike rate. You can get involved in the ebbs and the flows of the market, and you can consistently nip away at the profit targets. It might take you a little bit longer to hit your profit target. It might take you a bit longer to pass each phase or get a payout. But this game, increasingly so, but even more so over the long term, is about staying in the game. That's it. And that's all we want to do. We want to keep our powder dry. We want to stay in the game, and we want to make money. If we look at it in a different way, okay, yeah, you can buy challenges, pass, get payout, blow, and buy challenge, pass, get payout, blow. But then you get your risk restriction. You get your risk restrictions. Then you get, payout denials and things like that. And you don't want them. You want to be leveled up. These big firms now, like if you look at My Funded Futures, right? They've now got Blue Row Capital, which they announced recently. FTMO has got their, I can't remember their prop, their quant prop desk, you know, funding pips. Seacrest, we've all got these scaling plans, and they're designed to really find that 0.01% of a trader. That's what you want to be like. If you just want to make money and run, fine, do that. But trading is long term, not short term. However, I get it. Who's the mug? If you're making $1 million in payouts, you don't really care about how you're blowing accounts and all that jazz. But I do. I've been in this game a long time, and I've never been one to chase the big leaderboard, 100K, 200K, $1 million in payouts in a month. And that's because I personally believe that breeds bad habits, bad psychological elements. Because yes, okay, you're just looking at it at a ratio of, I paid X for challenges, but I got this as a payout. So I paid 5 grand, but I made 20 grand. So I'm up 15 grand. And rinse and repeat, rinse and repeat. Whereas how a professional looks at it and favors it would be, oh, I've spent $500 on a 100K plan, and I've got 10 grand in payouts. That's the trader you want to be, in my opinion. Whether that's right for prop firms or for your mantra with prop firms or not, that's the right way to be. That's the longevity part of the game, as Anthony has just touched upon. So, yeah, anyway, sorry, I went off on a tangent. Again, had you have traded, obviously, this bullish pennant wedge with all of the other confluences, you would have had more than 1 R available in this trade. Yes, if you're just trading the extremes, you would have taken 2 R out of that trade at 80, 90%. Let's say 90% because you're trading in a range. You're trading 90% out of that position. So you would have made spot 9. So you'd have made 1.8, give or take, from those 2 trades, gross. And then obviously if you had held another 10% on that short, you would have been stopped out for a loss. And then obviously you would have been holding that other 20% or other 10% on that upside as well. So cool. Any other questions, any comments? I've just realized I've run over the time, so I might have to cover GA and EA tomorrow. So turn up tomorrow, Anthony. Yeah, GBP rates as well. That's why I would do that. There's going to be a lot of movement. Longevity is the only metric worth its salt in the game, in my opinion. Yeah, it's not how much money you make. It's about how long you stay in the game, because the more money you'll make. I have to leave. Yeah, same. I have to leave. Thank you, everybody, for today. I've got to quickly go and do something before I've got another meeting shortly. Thank you, everybody, for turning up. Again, I hope this is what you're looking for. Education, analysis, real experience, no noise, no FUD, no fugazis, no FOMO. I can touch upon euro dollar tomorrow, if that's okay. K.Walter Timothy 2828, as I've run out of time for today, and I've got to do something quickly before another meeting. But as always, please come tomorrow. If you're watching the recording, thank you very much. If you've watched the live stream, I hope you've enjoyed it, and equally to those that are now watching the recording. But trade safe, trade smart, trade Seacrest, and I'll see you this time tomorrow, Monday through Friday. Have a good afternoon. Have a good day trading. And stay liquid.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check. Seacrest